All right, let's do this exercise very quick together. Let's try to identify whether an account is an asset, a liability, or it's neither. And then if it's an asset and liability, whether it's a current one or a long-term one. Okay, so this is important in terms of structuring the financial statements. You need to know whether it's short-term or long-term to be able to structure them. All right, so what is building? Building is a long-term asset. Accounts payable. Short-term liability. Total expenses. The short-term and long-term only relates to asset and liability. I think you were thinking of temporary accounts, right? But temporary accounts doesn't fall under balance sheet, remember? So we're only taking care of balance sheet accounts here. So total expenses doesn't apply to a part of asset or liability. Remember, it's equity, right? So total expenses is neither, not applicable. It's a temporary account, but it's not part of the balance sheet. Here we're just taking care of the permanent accounts and separating permanent accounts into current and long-term. Okay, now we'll move on. Accumulated depreciation would be asset, and specifically long-term, because it goes hand in hand with either furniture or building or equipment and machinery. Okay, salary payable, accrued liabilities. This is a type of liability, and specifically short-term. Salary payable. You definitely don't want to work January 1st and then get the paycheck next year, right? So usually salary payable, rent expense, these accrued liabilities are considered short-term. And it is short-term. Okay, prepaid expenses. Prepaid expenses is asset, and specifically it's short-term asset. So if you prepay something, usually you don't prepay it for 2 years. Oftentimes it's just for a few months in advance. So this is just, generally speaking, prepaid expenses, we rarely see it prepaid for 2 years or 5 years. Okay, otherwise it will be considered a type of long-term asset. So usually prepaid expenses, we define it as the assets, the prepayment that we make just for a year of time. Okay, so any type of prepayment, you just assume it as short-term asset. So which is why in adjusting entries, we will be adjusting them as time goes by. Those will expire, will be used up within a year of time. Okay, service revenue. Not applicable. Again, just like total expenses, it's part of equity, it's not part of balance sheet. So for identification, it's not asset, not liability. So you don't have to classify them into short-term or long-term. But it is a temporary account. Okay? Cash, asset, current. Okay, inflow and outflow of cash is very frequent on a daily basis. There's actually another statement that we didn't focus on now, statement of cash flows. That'll be introduced to you in the very last chapter. You can take a look at all the cash inflow, outflow based on different categories. Okay, accounts receivables. Asset, current. Right, you'll be collecting the cash in a few weeks. Interest expense. Neither one. So not asset, not liability, it's an equity account. Equipment. Asset is specifically long-term. Okay, so these are the identification and clarification, whether it's long-term, it's current. Just make sure that you understand the ones that do not fall under either one of them. Okay, total expenses, service revenue, interest expense. And from the responses I heard, prepaid expenses, make sure you understand this. Asset accounts, and it's a current asset account. Okay, service, and also the other one, accrued liabilities. Accrued liabilities is also short-term. Okay, once you know what is short-term and long-term, this is also useful for the last part of the chapter. Okay, besides looking at financial statements, the Performance is just by its number for each and every account. Oftentimes, users of financial statements also do some analysis with an